Get ready, because the news cycle is absolutely blazing today, and Electro Drive News is bringing you the hottest updates you absolutely cannot afford to miss. We've got seismic shifts happening across the automotive landscape, with major players making moves that are sure to redefine the game. First up, we're diving deep into a crucial internal address from NIO's leadership, revealing their unwavering commitment to achieving profitability. This isn't just about numbers, it's about dispelling doubts, boosting confidence, and learning from the best to drive operational excellence. Get ready for the inside scoop. Next, we're shifting gears to infrastructure that powers the future. NIO is gearing up to roll out its groundbreaking fifth-generation battery swap stations, promising enhanced compatibility and intelligence. This is a major step forward in their long-term strategy, and we've got the details on when and how this revolutionary technology will hit the road, potentially transforming energy solutions for multiple brands. Now, let's talk market dynamics and the ever-watchful eye of Wall Street. We're analyzing a fascinating breakout moment for NIO stock, pushing past key resistance levels. But it's not just about the charts. We're uncovering discussions around coordinated sentiment campaigns and the battle for investor confidence. Is this a genuine technical win, or is something more complex at play? And finally, we're looking at another critical juncture for NIO stock, poised for a potential breakout fueled by upcoming delivery reports and earnings. Can strong fundamentals and positive market sentiment propel the company past key resistance levels? We've got the analysis you need to understand what's driving these movements. Make sure you like this video, subscribe to Electro Drive News, and hit that notification bell so you never miss an update. A crucial battle is being won. In a candid internal address, NIO founder, chairman, and CEO William Li has powerfully reaffirmed the company's commitment to achieving fourth-quarter profitability, aiming to galvanize employees and bolster external confidence. Speaking for approximately 90 minutes, Li acknowledged that fewer than 1% of employees initially believed in the possibility of reaching profitability this year, underscoring the ambitious nature of the target. With only a month remaining in the fourth quarter, Li stressed that while challenging, profitability is still attainable through a clear focus on the fundamental equation. Profitability equals sales revenue multiplied by gross margin, minus expenses. He highlighted that key products like the Onvo L90 and the new NIO Ease 8 are crucial for this endeavor, boasting high unit prices and solid gross margins. Furthermore, a range of other models, including the Onvo L60, NIO ET5, NIO ET5 Touring, NIO E6, NIO EC6, NIO ET9, and Firefly, are expected to maintain steady delivery volumes, contributing significantly to the revenue stream. Li expressed confidence in the current sales revenue projections and the achievable gross profit. A significant point of emphasis was NIO's customer acquisition challenge, where Li noted that a substantial 30–40% of potential customers hesitate due to concerns about the company's long-term viability. Achieving profitability, he stated, is the most effective way to dispel these rumors, strengthen user confidence, and resolve many of the company's current issues. We have the opportunity to achieve profitability in the fourth quarter, and we must do so. We must win this critical battle. Everyone must give their all to make this happen, Li urged his team. He identified Toyota as the global benchmark for automotive companies, praising its high operational efficiency and robust cost control as key management lessons NIO aims to emulate. Li also shared encouraging news about the third-generation Ease 8 SUV, reporting strong pre-order numbers that exceed initial conservative estimates. The production plans for the new Ease 8 are being ramped up, supported by highly cooperative supply chain partners, some of whom have already placed orders to ensure early delivery. Production is currently on track without any foreseen issues. NIO's strategy also involves leveraging its sub-brand Onvo, with the L90 SUV having achieved record deliveries in August, reaching 10,000 units. This positive momentum, coupled with the internal drive for profitability, sets a determined tone for NIO's near-term future. Hold on tight, the road ahead is full of surprises. Next, we're exploring the cutting-edge infrastructure NIO is building to power its future. Powering the future together. NIO is set to revolutionize its energy infrastructure with the upcoming rollout of its fifth-generation battery swap stations, slated to begin in China in early 2026. This significant development was confirmed by co-founder and president Li Hongqin, signaling that the next-generation stations are on track for timely implementation. Qin stated during a media Q&A at the Chengdu Auto Show that the development is proceeding smoothly, with engineering units already constructed and undergoing rigorous verification processes. The fifth-generation battery swap station is a highly compatible and intelligent battery swap station, and it can be said to be the ultimate goal of our battery swap strategy, Qin explained. A key feature of these new stations is their enhanced compatibility, designed to support not only NIO's own brands, NIO, Onvo, and Firefly, but also external brands that have partnered with the company. This move underscores NIO's commitment to building an open ecosystem for battery swapping. Qin also hinted at ongoing collaboration with CATL on the chocolate battery swap technology, suggesting a strong possibility that the Firefly model will be among the first to utilize it. This strategic direction aligns with NIO's broader infrastructure push, aiming for greater flexibility and customization in its battery swap network. Earlier in the year, Fei Shen, head of NIO's power division and chief of the Onvo sub-brand, emphasized the focus on making future stations more adaptable to diverse user needs. NIO has also patented a modular system that allows for the expansion of stations by adding new units, a design intended to manage increasing demand in densely populated urban areas. Looking even further ahead, NIO is considering the development of larger battery swap hubs in major cities like Beijing, Shanghai, and Shenzhen, which could boast significant daily capacities. Despite setting a goal to build 1,800 to 2,000 new swap stations in China this year, the company has installed fewer than 500 new sites as of late August. Meanwhile, NIO recently celebrated its 200,000th battery swap in Europe, though the expansion of new stations on the continent is experiencing a slowdown. This initiative represents a critical step in NIO's vision for convenient and efficient electric vehicle energy replenishment. But will the market embrace this technological leap? Prepare for a deep dive into NIO's stock performance and the market sentiment surrounding it. Navigating the currents, NIO's stock and market sentiment. NIO stock has recently broken through a significant resistance level at $6.30, signaling a potential shift in its prolonged downturn. This technical breakout, however, has coincided with patterns of negative commentary that some market observers believe may be more orchestrated than organic. The timing of these negative sentiments, often appearing when NIO begins to gain upward momentum, has led to speculation among retail investors about coordinated campaigns potentially linked to fervent supporters of rival companies, particularly Tesla. Users like at NIO Switzerland have pointed out a recurring trend where critical videos and posts flood platforms like YouTube and Twitter precisely when NIO's stock starts to climb. This has fueled discussions about whether these campaigns are an attempt to suppress NIO's bullish momentum and maintain negative market sentiment. The underlying question for many is why such a focus on NIO's performance exists if a competitor is performing exceptionally well. From a technical standpoint, the stock's ability to remain above the $6.20 range is crucial for sustaining this breakout. Success in holding these levels could pave the way for potential targets at $7.50 and even $9. Conversely, a failure to maintain this upward trajectory could see the stock retreat towards the $5 support level. With trading volumes reportedly increasing and more institutional investors paying attention, NIO's upcoming price movements will serve as a critical test of both its technical resilience and its capacity to navigate what appears to be organized online opposition. The interplay between technical indicators, investor sentiment, and the potential for coordinated market influence creates a complex but compelling narrative for NIO's current market position. Can NIO overcome these market headwinds? Get ready as we break down the critical week ahead for NIO stock, driven by crucial data releases. Poised for a breakout, NIO's pivotal week. NIO is standing at a critical juncture, with its stock potentially set for a significant breakout driven by upcoming delivery figures and quarterly earnings reports. Analysts and traders are closely watching this pivotal week, anticipating that strong performance in both areas could propel the stock above the $7 mark, with a potential rally towards $8. Respected trader at the Value Trade highlights this dual catalyst event as crucial for establishing NIO as a standout performer in the competitive electric vehicle market and attracting renewed institutional interest. The stock has demonstrated considerable resilience, recovering from lows around $3.20 to consolidate in the $6.40 range. This pullback is viewed by many as a healthy part of a broader uptrend, setting the stage for a powerful next move. Key technical levels indicate that bulls are currently in control, but fundamental catalysts are essential to overcome existing overhead resistance. The immediate focus is on two critical events: Monday's delivery data and Tuesday's earnings report. Strong delivery numbers would underscore NIO's operational momentum and its growing market share in China's fiercely competitive EV landscape. On the earnings front, Wall Street analysts are anticipating 14.2% year-over-year revenue growth and earnings per share of CNY 2.22. Exceeding these expectations, particularly regarding profit margins and future guidance, could ignite significant buying interest. Success in both these areas could trigger a breakout above $7, with $8 representing the next logical target. Conversely, any disappointment could lead to a pullback towards the $5.50 support levels. The current market sentiment appears to be shifting positively, with technical patterns suggesting underlying strength. This week's performance will ultimately determine whether NIO can sustain its recovery momentum or if it faces another period of consolidation. For investors, this is a crucial test of the company's execution capabilities in an increasingly demanding global market. This week is undeniably crucial for NIO's trajectory. Join us for a lightning round recap of all the top stories. And that's a wrap on another electrifying episode of ElectroDrive News. We've seen NIO's leadership pushing hard for Q4 profitability, signaling a determined drive for financial health. The company is also revving up its battery swap network with advanced 5th-gen stations, promising wider compatibility. We analyzed NIO's stock, looking at technical breakouts amidst discussions of market sentiment and potential coordinated campaigns. Plus, we broke down the critical week ahead, with delivery numbers and earnings poised to impact NIO's stock trajectory. Don't miss out on future updates. Hit that like button, subscribe to ElectroDrive News, ring the notification bell, share your thoughts in the comments, and follow us on all our social channels for even more exclusive content.